It's 1:30 p.m. in Lagos, same time in London. We're bringing you markets, insights, and analysis on Business Incorporated. Here's what's coming up on the program. Afrexim Bank and China Development Bank signed $400 million loan to support African small and medium-sized enterprises. The International Monetary Commission Fund says that fuel subsidies are eroding Kenya's green energy drive. And South Africa's competition watchdog sets eyes on Google. Hello and welcome to the program. I'm Will Ibong. Let's kick off with the markets. First up, major equities in Africa, where we're seeing at intraday, major equities were trading with mostly positive sentiments. We see the Nigeria's NGX trading up more than 1/3%, 0.37% up, and South Africa's JSE down 0.19%. Now in Egypt, the EGX30 was trading up at 0.26%. And while the Nairobi Securities Exchange closed Monday's session in the red. Now we flip over to more developments in the equities market in Nigeria, where shareholders of one of Nigeria's leading financial institution, Fidelity Bank, have approved a capital raising exercise through a public offer for up to 10 billion ordinary shares and rights issue of up to 3.2 billion ordinary shares. And it's representing one new share for every 10 shares held to new and existing shareholders, respectively. Now, according to the chairman of Fidelity Bank, Mr. Mustafa Chikeobi, the bank is on a solid growth trajectory and requires additional capital for growth in profitability, domestic and international expansion, and to enhance its digital capabilities, as well as ensure increased shareholders' value. The bank has been able to increase its earnings per share, and for the first time in 35 years of operation, the bank crossed the 50 billion naira mark in pre-tax profits. Now let's go over to the Middle East, where markets were mixed at intraday. Abu Dhabi index was up marginally 0.01%. We're seeing that flattish trade at intraday. Dubai, however, was down more than 0.5%. Elsewhere, Saudi Arabia slightly down, but marginally down 0.06%, while the Qatari index was up more than 1/3%, 0.34%. Now, we move over to the other parts of the world. Tesla is getting ready to defend itself in 2 trials over the safety of its autopilot feature, as failures of that software have played a part in deadly accidents. Lars Alter is with Deutsche Welle in Berlin, and he has been following the story. Lars, what can you tell us about these trials?
Yes, hello, Will. Thanks for having me. Well, both of these lawsuits against Tesla are playing out in the US. The first one is scheduled for mid-September in California. It's a civil lawsuit containing allegations that the autopilot system caused a Tesla Model 3 to suddenly veer off a highway east of Los Angeles at around 100 kilometers an hour. It struck a palm tree, burst into flames, killing the owner who had been using the autopilot feature. The second trial is set for early October then in Florida, and that one is about the 2019 crash north of Miami, where the owner of another Model 3, same car here, drove under the trailer of an 18-wheeler that had pulled into the road, shearing off the Tesla's roof and also killing the driver. Well, the one who was supposed to do the driving, he was also using the autopilot system at the time. Now, Tesla denies liability for both accidents. The company said repeatedly that autopilot is safe when monitored by humans. In court documents, Tesla insists that drivers must pay attention to the road and keep their hands on the steering wheel. As one Tesla quote actually puts it, there are no self-driving cars on the road today.
But how important is this for Tesla and for the CEO, Elon Musk? Can you tell us?
Yeah, this is tremendously important for Tesla, mostly because every case sets a precedent for other cases. And there will be other cases as Tesla technology has been involved in other accidents, including fatal ones, of course. Now, that doesn't make Tesla necessarily a less safe car. After all all car companies and all sorts of models driven out there are involved in any number of fatal accidents. And as we are seeing more Teslas take to the road, we will see more Tesla accidents, just like we will see more autopilot accidents as more people are using autopilot functions. Now, if Tesla wins these cases, it would certainly give the autopilot software a confidence boost, and the company in general too, as autopilot technology has been a large part of their sales pitch for a long time. Now, if they lose or if they have to pay large amounts in punitive damages, there could be an avalanche of lawsuits filed by other people then. It will be interesting also how this is all playing out for Elon Musk, because the founder and CEO of Tesla has repeatedly said in the past that he himself and personally was leading the team in charge of the autopilot system. Now, we know that Elon Musk is a loudmouth. He has repeatedly tweeted over the years that he was test driving Tesla cars equipped with, quote, full self-driving software, and he has for years promised that Tesla would achieve self-driving capability. So I guess one could argue that if the CEO says that often enough, that customers can't be blamed for not heeding warnings about keeping their own hands on the wheel.
I don't know if I want to leave my safety in the hands of a self-driving car, Lars, but what are markets, what are investors looking at in today's markets?
We're looking at Asia again, and we're hearing that the US and China will hold fresh talks on trade and some other economic topics. For that, US Commerce Secretary Gina Raimondo is in Beijing, and it's all about diffusing tensions with the world's second largest economy. For the US, it seems important to, quote, ensuring open lines of communication between the United States and China. Sounds very basic, of course, and China, however, is a little bit less optimistic. Beijing has serious concerns over Washington's trade curbs on Chinese businesses. Anyway, investors will follow these talks closely, as the relationship between the world's two largest economies is obviously a crucial factor. As for Germany, a new survey sees the investment climate here at its lowest in 2.5 years, the economy here being dogged by the same old problems we've seen for a while now.
Thanks so much, Lars. Lars also there in Berlin for the updates. Now on to the UK, where the government has confirmed that it will delay the introduction of post-Brexit checks on food by another 3 months. Juliana joins us from London. Juliana, it's looking like the long-promised new regime of bringing controls on imports from the EU would not be ready in time.
Good afternoon. Well, that's absolutely right. Brexit is the gift that keeps on giving, or, of course, a headache for the millions of small to medium-sized enterprises which make up the engine of Britain's economy. Now, the British government have just this morning released border targeting operating model, which is basically a dossier explaining what is happening at the ports at the moment, because many of us don't have a clue. And within this document, it has been confirmed that yes, checks on any food produce coming in from the European Union into the United Kingdom will be again delayed for 3 months. It hasn't begun already. It was supposed to begin in January 2024, but there appear to be an array of different issues. And now, just to kind of rewind backwards, of course, we left the European Union officially in January 2021. Boris Johnson, former Prime Minister, promised us that he had put together an oven-ready deal in 2020, which was quickly signed by the European Union. But of course, there have been an array of issues, not just the Northern Ireland Protocol, but particularly at the ports and with checks coming in. Now, according to economists and those that have been following this situation very carefully and meticulously, it is because of inflation. Now, we know we are going through a cost of living crisis. It is easing slightly according to official data that we've been seeing, but there are still going to be costs on the checks of these goods coming into the UK. And now we know that Prime Minister Rishi Sunak, he pledged at the beginning of the year that halving inflation is basically his #1 goal as we head into a general election. And the fear from the Treasury is that if this £1 billion or so extra cost, which is what they're expecting it's going to be costing for these goods, is placed on SMEs, and then that recession that everybody fears is going to come into light, because people, of course, are going to struggle to pay with their bills on top of paying for these checks. And then that also has an issue with inflation. So yes, a further 3 months delay. But as I said, Brexit is a gift that keeps on giving. So expect further delays across various issues when it comes to our bitter divorce from Europe.
Well, it's sounding more like a Brexit freedom fairy tale. So how are markets faring at intraday, especially after the summer bank holiday and also following China's stimulus to support markets?
Yeah, the UK blue chip index actually flying high at intraday. As you said, yesterday the markets were closed for the summer bank holiday, but we did have an announcement this morning by the Levelling Up Secretary, Michael Gove. And what that is that some environmental checks that had been rigorously put in place have now been lifted by this Conservative government, which basically means that several areas of land that were deemed unfit to build housing has now been given the all clear. So no surprises that UK house builders are on the top of the FTSE 100 today. So let's have a look at those numbers. The FTSE All Share is up 1.45%. The FTSE 100 is up by 1.49%. And the FTSE 250, the domestic market, that's up by 1.29%. In the currencies market, the British pound is currently trading down, though, on the US dollar by about 0.7%, though it's trading up on the euro by 0.05% and also trading up against the Japanese yen by 0.06% at intraday, Will.
Thanks so much, Juliana, for bringing us those updates from the UK. Now we move over to Asia, where markets rose across borders. Wall Street came off a winning day on Monday. Hong Kong and mainland Chinese stocks led gains in Asia, extending their Monday gains. Hong Kong's Hang Seng Index climbed about 2% in its final hour, while on mainland China, the Shanghai Composite advanced 1.2%. China is poised to cut interest rates on trillions of yuan of outstanding home mortgages for the first time since the global financial crisis, as policymakers dig deeper into their toolkit to shore up growth. Japan's Nikkei 225 climbed 0.18% after leading gains in the region on Monday. Now, the country's unemployment rate for July also came in higher than expected at 2.7%, compared with the 2.5% expected by analysts. However, Australia's S&P ASX 200 rose 0.71% to finish at 7,210 points, while South Korea's Kospi gained 0.34%. Now we go to the US, where stock futures were near flat early on Tuesday as investors look to the final days of what has been a difficult August for the market. Futures tied to the Dow Jones Industrial Average gained 0.05%. We see S&P 500 futures were up 0.08%. Nasdaq also with similar margin for the day, and just 3 sessions left in August trading month. The major indexes are on pace to finish lower. Investors will be watching out for earnings from companies including Best Buy and NIO before the close of the bell today, and this is followed by HP after the close, and also data on home prices, job openings, and consumer confidence are also due today. After the break, more stories from the African continent. Do stay with us. This is Business Incorporated. Welcome back. Now we're going to be looking at some commodities in Nigeria, which is beans. And Nigeria is one of the top consumers of beans in the country, and it accounts for over 46% of global production and 48% of total African production. So it's a huge one. However, Nigeria still has a supply deficit of 500,000 metric tons, forcing it to import from neighboring countries. Now, in August, the price of a 50-kilogram bag of beans rose to 70,000 naira from 60,000 naira in the previous month. Miriam Ode, analyst with financial derivatives company, joins us now. Miriam, why then do we still have this strong demand, I just want to know, for beans, despite the higher prices?
Good afternoon, Will. Thank you for having me. So we're seeing this under normal circumstances. Once the price of any commodity increases, we expect to see a corresponding decline in demand for this commodity. But we're not seeing that in domestic cowpeas or beans markets, simply because beans has now become a staple food or a staple commodity in the economy, with 72% of Nigerian households actually consuming this on a daily basis. Now, in addition to the fact that when the widely speculated notion that if you eat beans, you will go taller, the demand for beans is also spurred by the highly nutritional value of the commodity, and also because the price of beans is increasing at a slower pace than other major agricultural commodities such as rice, plantain, and even other sources of protein like egg. And this is evident in the recently released MBS report, which shows that the average price of beans in June rose only by 16% year on year, but that of rice rose by 32%, that of plantain rose by 38%, and that of egg rose by 33%. So these are the factors. These are consumers like you and I, obviously, would want to purchase or consume products that would rather pinch but not bite or weigh on our disposable income. And this is why we're still seeing the demand for beans still being high, despite the elevated beans prices in the commodity. Also, if we take a step out of the Nigerian border and we look at one of our neighboring countries, which is Niger, that is undergoing economic sanctions by ECOWAS, and this is restricting some of its exports of some of its commodities, one of which is cowpeas. And Niger is actually, interestingly, the second largest producer of cowpeas globally, and is actually the largest exporter of this commodity. So this limited supply would cause other countries or the international demand to shift towards other sources that is not Niger, to meet up with their domestic demand. And this is why we're seeing additional pressure on Nigeria's and the demand for Nigeria's cowpeas. So these two factors, that we're seeing increased demand domestically and we're seeing increased demand globally. So these are the reasons why this is even factoring into into the price of beans, as you said, has increased from 60,000 naira per bag to 70,000 naira per bag.
Okay, Miriam, something is just keep popping up now. It's noted in 2015, the EU, that's the European Union, banned beans exports from Nigeria due to not meeting the standards. And we're also seeing that the federal government also launched several intervention programs to support farmers to improve quality of these grains, yet the ban still stands. What factors do you think might influence the potential lifting of the ban, and what export potential does this commodity have, especially if this ban gets lifted?
Okay, to answer your question about the export potential of this commodity, Nigeria is actually the largest producer of the commodity, even though Niger is the largest exporter. So Nigeria is the largest producer of the commodity, and this is not only because of the intensified efforts by the government to increase domestic production, but also because of the favorable climate condition in the country, especially in the north, where 75% of cowpeas production is actually taking place. And so, this is the reason why Nigeria actually has large export potential, because we have the land, we have the climate when compared to other neighboring regions. And to answer your question about the what possible factors could prompt the EU to lift its ban, while the Niger closure or the restriction of Niger's border exports might not necessarily sway the EU to lift its ban on Niger, we're seeing that Peru, which is actually where the EU imports most of its cowpeas production, we're seeing their supply of cowpeas decline because of the severe floods in that region. Now, this coupled with the fact that Nigeria is actually making progressive efforts to increase its domestic supply of cowpeas and also increase the quality of these beans. This coupled with the fact that Peru is having low supply could actually sway the EU to lift its ban on Nigeria's beans exports. And Nigeria has a lot to gain from this, because we're already using $383 million every year due to this ban. And if we cumulate that and add it all together, that's $2.9 billion that has been lost since 2015 because of this ban.
We're looking at other alternatives or other means of growing beans in the country. We know that in 2019, the federal government approved the use of genetically modified cowpeas. Where are we at now? Can you tell us, Miriam, in terms of adoption of these genetically modified cowpeas?
Like you said, in 2019, the government actually allowed for the commercialization of the biotech cowpeas, but we're still seeing a low adoption rate among farmers, domestic farmers, and this is mainly because of the low private sector investment in this industry, simply because most private or some private individuals think that, okay, this sector is not investment worthy and just see cowpeas as poor man's meat, as is commonly said. Also, there's also limited access to this type of crop or this type of cowpeas seed in the market by farmers. This is because only 3 firms or 3 companies have been licensed to be able to produce this commodity. And also, interestingly, there's still this stigma around genetically modified crops, as most people feel like anything that is not 100% natural or has been genetically modified is harmful to the health. But the U.S. Environmental Protection Agency has come out and declared that this crop or these genetically modified crops are actually suitable for consumption at any level of dietary exposure, meaning that even if you eat 1 plate of beans, even if you eat 2 plates of beans, even if you eat 3 plates of beans, it's still fine and it is still safe. So the government has to increase the awareness of these genetically modified crops, letting people know that, okay, it is not actually harmful to the health, and then also to encourage private investments in this sector, and also to increase the number of firms that are allowed to produce the genetically modified cowpeas. By doing this, the Nigerian economy and even farmers stand to gain, because we reap increased crop yields from these farms and these crops, and then we will now have lower health risks for farmers because they don't have to spray insecticides as much. And then if they're not spraying insecticides as much, it's cost effective for them because they don't have to spend more money on pesticides and chemicals that are used to prevent weevils from entering into the commodity. So based on this, it is important to know that these cowpeas, these genetically modified cowpeas, actually have a positive impact in the Nigerian economy. And if our crop yields from them are increasing, we would see that Nigeria's export earnings would actually increase in the near term or in the long term. And also farmers' income would increase, and also the standard of living.
Thank you so much, Miriam Ode, analyst with Financial Derivatives Company, for sharing those insights.
Thank you.
Now we'll move on to other stories where the African Export-Import Bank, Afreximbank, and the China Development Bank, CDB, have signed a $400 million loan facility agreement to support the financing of small and medium-sized enterprises, MSMEs, across Africa. The 7-year tenure agreement signed in Cairo seeks to support African SMEs involved in extra and intra-African trade and those engaged in the productive sectors in Afreximbank member states. Speaking at the signing, African Bank says African SMEs continue to struggle to access adequate and affordable financing for growing their businesses, adding that the CDB facility will help increase the level of financing available to them. Now in Kenya, fuel subsidies continue to accelerate the use of fossil fuels, a move impeding green transition and more fiscal space for governments, according to the International Monetary Fund, IMF. In its latest climate action paper, the Branton Institution highlights that fossil fuel subsidies in Kenya surged to a record $7 trillion last year. This as governments supported consumers and businesses during the global spike in energy prices. The IMF says it is concerned that its subsidies lack a clear intent and framework. Meanwhile, data by the Energy and Petroleum Regulatory Authority, EPRA, shows Kenya spent 71.17 billion shillings to subsidize diesel, super, and kerosene in the 6 months to June last year. Now, a report by South Africa's Competition Commission alleges that Google and some other large tech companies are anti-competitive and making growth difficult for small local businesses. The commission wants Google to tail or tailor some of its products to promote the local businesses and then invest up to $17.3 million in them over 5 years. It also asked Google to introduce a new feature that displays smaller South African platforms relevant to consumer search, especially in travel and shopping. Some experts say this act by the Commission is putting the country's burgeoning digital economy at risk. Now, housing still remains a major challenge in Nigeria, and recent data shows the country has an estimated 28 million deficit as of 2023. That's according to real estate experts and managing director of Landway Investment Limited. Shola Bello, who spoke to Channels Television in Lagos, the sector needs huge investments, and she recommends public-private collaboration to close the gap. And that's it on Business Incorporated. Do join us tomorrow for another edition. I'm Willie Bang. Thanks for watching.